What's up guys, welcome back to the channel. My name is Joseph, and in today's video I'll be going over how you can use debit spreads to not only grow your small account, but to also increase your win rate as a trader. If you're going to enjoy this video, make sure to give it a thumbs up and subscribe. It only takes 2 seconds and it helps out the channel a lot. Also, if you want to be a part of a free Discord community where you can ask me questions about anything or even hop into some of my plays, make sure to check out the Discord channel in the description down below. So now that we have Robinhood pulled up, I'm going to go more into depth on how to set up debit spreads and exactly how you should be using them. I'm going to cover call debit spreads, and then later on in this video, I'll also go over put debit spreads as well. Now, before I show you exactly how to set up the call debit spread, as I said before earlier in this video, you want to be using spreads if you want to increase your win rate. Buying naked calls and naked puts is a bit risky, and a lot of people actually don't win with buying just straight call options. So buying debit spreads is going to limit your risk and give you that higher win rate, as I said before, when you're trading the stock. So right here we have Apple pulled up. And getting right into call debit spreads, when you're looking at a stock to buy, when you're using this strategy, you want to pick stocks that typically go in an uptrend. So right here I have Apple, and if we go over to the 3-month, we'll see that Apple has been on this nice uptrend, gradually going higher and higher in price. Also, if we look at the 1 year, it's also been going up, looking really good on that time frame. So that is step number 1. Pick a stock that has been going in a nice uptrend. So right here I have Apple. If you want another suggestion, you could use SPY, which is S&P 500. That typically goes up, any type of ETF as well. So if we go over to trade options, step number 2, when it comes to picking the expiration, you want to pick an expiration that's about a month out. Doing this will give us plenty of time, and it limits our risk even more because Apple may go down this week, but as we saw over the course of the past 3 months and a year, it's been on an uptrend. So you don't want to pick any close expirations. That's going to defeat the purpose of the strategy. You want your win rate to be high so that you're constantly profiting from this trade. And then last but not least, in order to set up the call debit spread, you want to make sure you have buy call, and then you can select whatever strike you want. I'm going to select this 142 strike right here. And then once I go over to sell call, I'll select the one right above it. Now this creates that call debit spread, and make sure it says call debit spread. You don't want it to say call credit spread or anything different. And I do get a lot of questions and comments on people not being able to set up their spread. Make sure you have level 3 trading enabled on your Robinhood account. If not, it won't give you the option to play spreads. So make sure you have that on so that you can play spreads as well. So the call debit spread is a bullish strategy. You want to be setting this up when you think the stock is going to go up in price or even trade sideways as well. You can use the call debit spread. And something that I really like about call debit spreads than buying just regular call options is that call debit spreads does not have time decay working against you. As we all know, when you buy a regular call option, every day time decay eats away at that option and you lose money. But with the call debit spread, time decay actually works in your favor because the closer and closer it moves to your expiration and the price is above your 2 strikes, the more and more your spread will be worth. So what this spread is pretty much saying is that we want Apple to close above 143 by our expiration. Now, if Apple closes anywhere in between, we start to lose money. And if Apple closes below our furthest strike, which is the 142, we actually lose our full $68 that it cost us. So that is pretty much what a call debit spread is. We're pretty much betting that the stock is going to stay above a certain price by expiration. And as we can see, once we set this trade up, it's already in our favor. Apple is already trading above our 143 strike, so we just needed to stay exactly where it's at or even go higher throughout the next month. Now, to calculate your profit for a debit spread, you want to take the difference between your 2 strikes. So 142 subtracted from 143, that's $1, and you multiply that 100 because we're dealing with options. So $100 minus our cost for the spread, which is 68, gives us that $32 max profit. And then our max loss is what we paid for the spread, which is $68. Now, You may be saying the risk to reward wise is pretty bad, but as I said before, the probability is in our favor and we're going to be winning this trade the majority of the time. Not only that, but we are making 47% if this trade plays out exactly how we want it to. We're risking $68 to make 32, so that's a 47% return in your money in only 1 month. And so that's pretty good if you ask me, 47% in a month. The main thing about this strategy is consistency. Now, that is pretty much how to set up the call debit spread and exactly how it works. I can give you guys a more in-depth reading on how your spread plays out throughout the given month as Apple moves up and down in price. So right here we have options profit calculator pulled up, and I'll also leave a link in the description to it so that you guys can easily access it. And what you want to go to is call spread. Right under spread section they have call spread. We just click on that. And this is pretty much going to allow us to set up the exact trade we had in Robinhood, but it's going to give us a better visual on how much money we can make depending on the given time. So right here where it says simple, we just type in AAPL, and right there it gets the price of the stock for us. And right where it says buy, we want to click select option. Don't forget that we selected the September 10th expiration. So make sure you have that selected or it won't be giving you the exact trade that you have. And then if we go back to Robinhood, we did buy the 142 strike. So if we go back to the calculator and we go down to 142, make sure you go to the left because that's the call section, and you want to click the middle price right here. And then when we are writing an option, we're selling an option. So we click write, make sure we're selected on September 10th, and we are writing the 143, click the middle, and then right there, it'll show us that this will cost us $68. And once we click calculate, it'll show us the exact graph on how we can profit and lose on this trade. Now, as I said before, buying regular call options can be risky, but with debit spreads, as you can see, if Apple were to trade sideways and stay at the same exact price, we will actually make money on this trade and we won't lose any money. And as I said before, the time decay actually works in your favor because right here, let's say we are on August 20th and Apple is still trading sideways, we only make 4% on our money. But if it continues to trade sideways throughout the rest of the month, we go up to 47% on our money. So that just gives you an example on how you are limiting your risk when you set up a debit spread. And obviously, if the price of Apple goes up, you will obviously be making money. And another thing I want to mention is that you can close this spread whenever you want. So if you're satisfied with the 26% profit that Apple has given you already, then you can close it out right there for that gain. Now, the main thing to keep in mind is that you don't want Apple to close below 142, which is that price that you sold, or you're losing the full $68. So let's say this week Apple decides to go down, but it starts to rise back up in price again. As long as it closes above that 143, that's where we'll make our most amount of money. And if it closes anywhere in between, we'll start to lose a little bit of money as well. So that is the exact graph on how this trade works and how you can profit or lose depending on the price of Apple throughout the month. So that is exactly how you want to be using call debit spreads. And now we'll go into put debit spreads and I'll show you exactly how to use those so that you can make some money as well. So I'll just use the same example with Apple. As I said, step number one, you want to pick a stock that's generally uptrending, but with a put debit spread, you want to pick a stock that's either trading sideways or even downtrending. So if you're bearish on a stock, I'll just actually go to a different example and pull up Baba. Baba has been down trading for the past few months, as we can see. If we go over to trade options, as I said, step number two is to pick a far out expiration. So now that we're on September 10th expirations, we can now select the exact strikes we want to use. So with the put debit spread, we want the stock to close below our 2 strikes. So if we click buy put and I select, let's say the 210 strike, you want to go ahead and sell the put right under it, and that will create that put debit spread. And this is pretty much saying that we want Baba to close below 205 by expiration. If it closes anywhere in between, you'll start to lose money. And if it closes outside of 210, that's when we lose the full $360. Now, when it comes to profit, our max profit for this trade is $140. Sorry about that. And the max loss is $360. So that's about a 39% return on your money in a given month if BABA continues on that downtrend. So you can find better setups depending on the stock and which strike you use. This is just an example. You don't have to copy the same exact one. You can find ones that make you up to 50 or even 100% on your money. So that is how you set up the put debit spread. And if I also go over to the option profit calculator and we type in BABA, as I said before, you want to make sure that you select the option and you have the right expiration selected. So September 10th, and this side we're going over to the right side, which is the put options. And if I'm not mistaken, we were buying the 210 strike. So make sure we go to the 210 strike over here, select that. And then we were selling the 205 strike. So if we go down to right, select option, go to 205, bam. And as we can see, our net debit is $360. Click calculate. And then right here, as we can see, if BABA goes up in price, we start to lose some money. If it trades sideways, we make money. Also, we just need it to close below the 205. As we can see, if BABA does go up in price, but it still closes below 205, we'll still make money as well. So this is the great thing about trading debit spreads. Limits your risk. It puts the probability in your favor. As you can see, 70% probability of profit. That alone tells you that this is a really great strategy to use. And depending on what stocks and strike prices you pick, the cost of a debit spread can be fairly affordable. So this is the chart right here. You can look at it for yourself. You can set it up on whatever trade you want to use. And that is how you use put debit spreads. So in today's video, as you saw, I showed you how to set up call debit spreads and put debit spreads. Also went into depth on how they work and why you should be using them if you're trying to increase your win rate. If you learned anything from this video, make sure to subscribe and turn on post notifications so you don't miss when I upload. If you want to learn any other strategies, let me know in the comment section down below and I'll try to make a video on that as well. And thanks so much for watching. I'll see you in the next one.